In this presentation, we will give an outline of the sample engagement, the sample project that we will be working on. We're going to go through a sample project. We're going to enter the data for that sample project as we have discussed thus far. For more accounting information and accounting courses, visit our website at accountinginstruction.info. For the example engagement, we're going to say that we have a new customer. Here is the new customer. And we're going to say that we already have gone through the engagement letter and the process for the new customer in terms of the engagement questionnaire. And this is just going to provide some information related to that as we go forward and enter this data for this project. So the customer is going to provide guitar lessons and sell guitars. So that's what our customer does. That's the industry that they are in. Note that we do have lessons, which is service-based, but we're also going to deal with some inventory in terms of selling guitars. So that's going to be something that's a bit outside of our norm, but we're thinking that because it's a small amount here, that it's something that we can work around. And we also just want to give an example of a bit more complicated situation so we can talk about what we could do about the inventory. Although we won't be using a full service inventory tract in QuickBooks, how could we then deal with some situations where we have some inventory, especially with smaller amounts of inventory? The engagement letter is completed, so we've signed the engagement letter and we have a contract. And note that, once again, we don't need necessarily an engagement letter to have a contract, but the engagement letter gives us more of a formal contract and gives us the terms of what we expect between each other for that contract. The objective is to enter 2 months of data from the bank statements. That's what we're going to do. So what has started so far, this is going to be a new engagement. It's a continuing business for our customer. However, we have 2 months of data at this point in time that has not been entered for this time period. So our goal when we first start off the engagement will be to enter 2 months of information from the bank statements. Our client, then our customer, is going to provide us with those bank statements. We're going to use those 2 bank statements in order to enter the data into our system. We're going to enter 2 months of data from the credit card statements as well. So we'll discuss different options for the credit card statements. Again, this is another area where we may want to decide, do we want to deal with credit card statements or not? Do we want to put them into our system or deal with them outside of them, or even not take on clients that have outstanding credit card issue balances within the QuickBooks system or within their business credit card? But we're going to look at the credit cards and discuss those options. So we've got this credit card information. We're going to discuss how can we put the credit card information into the system and still be somewhat of a cash basis, or make this information as easily to input as possible. We're going to provide financial reports at the end of the time period, in this case at the end of the 2 months, and that will include the balance sheet and the income statement. We're going to provide backup data as requested. So we'll discuss how to provide that backup data. Remember, we're not in a system here where the client's going to be entering data into the QuickBooks system at all. We're going to enter all the data into the QuickBooks system and just provide the client with the information from it. And that's going to create a clear divide between who's entering the data into the system, so we know what's happening in the system. If we are in a system where they're both entering data into the system, then you're really more of an advisor role. You're not really doing all the bookkeeping. You're kind of advising them on how to do the bookkeeping and making adjustments and entering data when necessary. But and also in that system, they would probably be doing more of a full service, kind of entering invoices and all that kind of stuff, rather than being on a cash basis. So note that we will provide the backup, however, because the backup will give our customer the assurance that we're not going to like hold their data for ransom and not give them their data if requested. Our goal isn't to hold their data and say you have to be with us forever because we're never going to give you your information back. That's not why we're not sharing the QuickBooks information. The reason is because that's the way the system works. We want to put the information in there on a cash basis and make it as easy as possible to do so. And if we're going back and forth with the data, then that becomes less easy. However, if you want to leave and take the data at any time, you can do so. We're going to provide the data a backup file, and any bookkeeper can take that back file and use it, restore it, take a look at it, do whatever they want to do with it. The collaborations, we're going to work with a tax and financial statement preparer. So at the end of the year, the main goal here is going to be to make the financial statements for tax preparation and for use of our client here. So we're going to have to work then with someone at the end of the year. We're going to say that we're going to work with a CPA firm or accounting firm in order to help make adjustments, and we'll discuss how that relationship can work and of course do the tax preparation. We're going to work with a payroll company, and we'll discuss different options for payroll. This will be another area kind of like inventory where we'll kind of branch off and we'll discuss different options we can do with relation to payroll as we go through this project. So we're gonna deal with payroll in some way. Another one of those areas where you may want to work with small customers that don't have payroll possibly, or as we'll do here, we'll look at the payroll and look at our options. We'll branch out a bit and say, hey, what can we do with the payroll? How would we want to set up the system? What systems would we want to work with if we allow to work with clients that have the payroll? Provide data as requested by client. So any other data that would be requested, such as we need other formats of reports or something like that, like how much did we pay this vendor, or questions like that. We'll provide those types of reports as well and do any kind of research within the data as would be needed. As we enter the data into QuickBooks, QuickBooks will provide us with the standards financial statements, the profit and loss, and the balance sheet. But other reports could be useful as well, especially reports in terms of, did we pay these people? Have we paid this vendor and that vendor? And we can look at payment reports as well to answer questions like that as needed. Notes. It's not the first year of operations for this company, so this business has been there in the past, and there is some bookkeeping in the past. So it's not like we're starting from scratch. And the point is that that's okay. It's okay for us to have a continuing business, and we don't have to completely panic about that, because although they might have data in the past, really what we're doing for these small companies usually is entering the data that's going to be the activity, the income statement data, because that's what they need for the financial statements. That's what they need for the taxes at the end of the year. So what we may not have then is the full connection between the balance sheet, the retained earnings, all the beginning balances from the prior time period. And that's necessary for a continuation from the balance sheet, but not for the income statement, for the performance over the year necessarily. So just be aware, if we need to connect those things out and make financial statements with the beginning balances, we might want to work with a CPA firm to make that connection for the financial statements. But we can still start from here forward and put in the data from this point forward, whether they're a continuing business or not. If the client comes to us in the middle of the year, as they kind of have done here, so we're entering 2 months of data, then we also want to ask the question that even if they have a prior system, how do we want to enter the data into our system? If they have a prior system that's been going for part of this year, then we could try to kind of patch that together by basically starting our system in the middle of the year and going forward. And then when they want to do the taxes, they would have to add together the prior data from the prior system and our data. Or we can try to enter those beginning balances in some way. That could be a little bit messy. We might want to work again with an accounting firm if that's the kind of system they want. Or more likely, the data hasn't been entered for the current year at all, and or if it has, it's in a more, not a cash-based system. It's in a more full service system that's not complete. And therefore, it might just be easiest for us to start at the beginning of the year, no matter what time it is now. Start at January of this year, get the bank statements from January to December, and just enter them all in this similar format, cash-based format, so that we know what is going on for that time period and use that data then for the tax preparation. Inventory, more difficult for our system. So we are going to take on inventory. Again, that's a question you're going to decide. Do you want to take on inventory or not? We'll discuss some inventory and some options there. What we're not doing, note, is tracking accounts receivable or accounts payable. And because we're just doing a cash basis, and accounts receivable and accounts payable are accrual accounts. That's tracking who owes us money. So for example, our customer might be doing guitar lessons and billing the client for guitar lessons and having outstanding bills that are due to us. Full service bookkeeping would enter the bill or invoice into QuickBooks, track who owes us money, and be able to know who owes us money and ask them for it. We're not doing that in the system, however, because all we're doing is a cash basis to be able to report basically kind of taxes at the end. So we're not tracking who owes us money, and therefore we'll have to think, if we want to know those things, if we want to like invoice the client or use QuickBooks to invoice the client or to track accounts receivable in some way, then we're going to have to come up with some alternative system outside of messing up our cash basis system to do that. And we'll discuss some options that you might be able to add on to that, but just note that when working with clients, if they have accounts receivable and they have money that's owed to them, they're going to have to track it in some other way than what we're discussing here because we're working on a cash basis. Now, that's usually really important for accounts receivable for some customers, some clients that need to track accounts receivable, and how are they going to do that? And it's less so important oftentimes for many customers for accounts payable, but the same applies. We're not tracking who owes the money within the system per se. We'll discuss the credit cards situation, but in terms of vendors and normal bills, because most people pay like these type of things as they go if they're a service company, like the utility bill, the phone bill. So we don't typically, for smaller companies, unless they have inventory, have as much need for the accounts payable a lot of times. But same thing will be true. We're only entering the data once paid, and therefore we're not going to be having the tracking of the payables, who we owe. We're just going to track when it has been paid at that point in time. For more accounting information and accounting courses, visit our website at accountinginstruction.info.